Hello everyone, I hope you are all fine. Welcome to our first e-learning lecture for Financial Accounting 1. Today we are going to discuss and start explaining the accounting cycle. The accounting cycle starts with a source document. A source document like a purchase order, like a bill, like invoice or whatever document that indicates that a financial transaction occurred. After this, the accountant starts to prepare and to do his work by first recording these transactions in the journal, then posting to ledger, which is step number 3, and then summarizing all the transaction within the trial balance, and finally preparing the financial statements, which are the income statement, the owner's equity statement, and the balance sheet from this trial balance. Type. How do we start recording in journal? We start recording in journal by first analyzing the transaction into its involving accounts, just like we have done within the accounting equation. We used to do the analysis of the transaction and say, for example, that the involved accounts are cash and capital, for example. This is step number 1. So step number 1 is to analyze the transaction, then applying the double entry rule. The double entry rule. This is the form and the format of the journal. It has a column for the date, a column for the accounting title and explanation, and the two most important columns that are debit and credit. Here we write the figures. The numbers are written within these columns. So before recording the transaction within the journal, we need to explain and to know the double entry rule. What is the double entry rule? It is the rule or the method we use to record the transaction within the journal. This theory or rule states that every financial transaction has a double equal effect. One is called debit and the other is called credit. So what we are going to do to record the transaction within the journal is to analyze this transaction into its involved accounts, then choose one or two or more of these accounts and place it within the debit side, and choose other accounts and place it within the credit side, and the total debit must be always equal the total credit. Type. How do we determine the debit accounts and the credit accounts? We determine the debit and credit accounts according to the following rule or summary. This is a summary for the double entry rule. This summary or this schedule states that we have some accounts that are normally debit. These accounts, like assets, expenses, purchases, drawings, are normally debit accounts. And we have other accounts that are normally credit, like liabilities, revenues, sales, and capital. But the main and the important thing is what happened to this account within the transaction that we need to record. Did it increase or did it decrease? If the account is a normally debit account and it increased, it will gonna stay within the debit side. If it decreased, it's gonna place it within the credit side. But if the account is normally credit and it increased like this, so you're gonna place it and keep it within the credit side as it is. But if it decreased, you're gonna place it within the debit side. So you need to determine whether this account is a normally debit account or a normally credit account. Then you need to determine, did it increase or decreased then apply the rule in red. Let's see an example. This is an example to illustrate how we record within the journal. We have some given transactions that occurred during January, and you are required to prepare the journal entries, then posting to ledger and preparing to the trial balance. For now, we're gonna just solve the first required, which is preparing the journal entries. Let's see how this is gonna be done. Right, how do we start recording in journal? We start recording in journal by first analyzing the transaction into its involving accounts, just like we have done within the accounting equation. We used to do the analysis of the transaction and say, for example, that the involved accounts are cash and capital, for example. This is step number one. So step number one is to analyze the transaction, then applying we're gonna write this within the journal like so. Date January 1, description or explanation. We start by the debit account. We already know that cash is the debit account. To place it here and write its value within the debit side. Then we move a little bit to the right and write the credit account, which is capital, and place its figure within the credit side like this. And between two brackets we write a simple statement that explains this entry and explains the transaction. You can just simply copy it from the given and make it sure as you can. How about January 2? January 2 purchased a building for a total price of 140,000, paid 28,000 cash, and a note payable was issued for the balance of the purchase price. Here, if we gonna analyze this transaction, gonna find that there are three involved accounts here: building, cash, and notes payable. So the question is, which of these gonna be placed in the debit and which is gonna be placed within the credit side? Let's start one by one. Building is an asset. It is normally debit and it increased. Of course, when you purchase building, you increase your buildings and increase your assets, right? So it's debit and it increased, so it's gonna stay in the debit side according to the rule we previously discussed. How about cash? Cash is also an asset. It is normally debit, but here it decreased because you paid 28,000, so your cash and your asset decreased by this, so you're gonna place it in the credit. When a normally debit account decreases, you're gonna place it within the credit side. How about notes payable? Notes payable is a liability. It is normally credit and it increased here. Before January 2, we didn't have any liability, and by now we have 112,000 as a notes payable, so you increased your liabilities. When a normally credit account increases, it stays in the credit, or you place it in the credit side like this. Like this. We start writing the debit first, which is building for 140,000, cash in the credit by 28, notes payable within the credit by 1012. So for now we have building in the debit and two accounts within the credit side, which is cash and notes payable. You should make sure that the total debit equals the total credit each time. Each recorded transaction, its debit side must be equal to the credit side. This is why we call it a double entry. And between brackets you write the explanation. Hello everyone, I hope you are all fine. Welcome to our first e-learning lecture for Financial Accounting 1. Equipment in the debit side, we write the debit side first for 4,000, cash within the credit side for 4,000, and you write the explanation, purchase the equipment for cash. This is cash, not each. Okay. January 12, purchased supplies on credit for 3,000. The two involved accounts here are supplies and accounts payable. Supplies for 3,000 and accounts payable for 3,000. Supplies is an asset, it is normally debit, it increased so it's gonna stay in the debit. Accounts payable is a liability, it is normally credit and it increased so you place it in the credit side, like so. Supplies in the debit, accounts payable in the credit, 3,000 and 3,000. January 14, paid 2,000 of the owed amount on January 12. So the two involved accounts here are cash and accounts payable. Cash is an asset, it is normally debit, it decreased so you're gonna place it in the credit. Accounts payable is a liability, it is normally credit, it decreased because you are paying and you are fulfilling your some of or part of your debt, so it gonna place in the debit, like so. Accounts payable in the debit side for 2,000, cash in the credit side for 2,000. Paid utilities expenses amount to 2,500. Utilities expenses for 2,500 is the first involved account. Cash is another involved account for 2,500. Expenses, utilities expenses is normally debit, it increased so it's gonna stay in the debit. Cash is an asset, it is normally debit, it decreased so you're gonna place it in the credit, like so, like so, like so. Utilities expenses for 2,500 and cash for 2,500. One last transaction, earned fees, revenues, amount to 5,000 and received half cash. Here we have three involved accounts. We have revenues, we have cash, we have accounts receivable. How about revenues? Revenues is normally credit, it increased so it's gonna stay in the credit. Cash is an asset, it is normally debit, it increased because you received cash. Your cash increased so it is gonna stay in the debit. Account receivable is also an asset and it is normally debit, it increased so it's gonna placed in the debit. So in the debit side we have cash and accounts receivable, in the credit side we only have revenues. How we gonna write it and record it within the journal, like so. Cash in the debit for 2,500, account receivable in the debit for 2,500, and fees in the credit side for 5,000. The final output will be like this. This is your solution for an example like this when you are required to prepare the journal or to record the transaction within the journal. This is what we expect to see from you. And you should make sure that within each entry the debit equals the credit. 45,000, 45,000, 140. The total here is 140, 4,000, 4,000, and so on. Each one of these is called a double entry. And we have a simple entry like this. It is that entry that has one account in the debit and one account in the credit, and we have compound entries like this. It is when one side of the entry has more than one account. Equipment in the debit side, we write the debit side first for 4,000. Cash within the credit side for 4,000,